Have you ever wondered what Cathie Wood has to say as a late star investor? Cathie Wood is one of the many big names in the financial industry whose opinion is truly valued by most people. Stay tuned and keep watching to find out what she has to say this time. Tesla bulls and bears mostly consider experts' opinions to either remain firm on their stance or switch sides completely. Of course, even experts have varying opinions on certain stocks, including Tesla. Some remain bullish on the company, even with numerous issues, and some are immensely pessimistic about it. In today's video, you will find out what Cathie Wood has to say. Although Tesla stock seems to be over the dip, with the stock price in the $600 to $700 range, it is still fluctuating between the $800 and $900 range. Recent fluctuations in stock prices, including that of Tesla, can be attributed to the recent crisis that shook the globe. The COVID-19 pandemic that swept across countries greatly affected the supply chain of Tesla and other companies when China enforced a lockdown due to its zero-COVID policy. On the other hand, the Russia-Ukraine war affected the economy a lot as other investors worried the U.S. could face a recession next year. Our investment management founder, Cathie Wood, thinks one already has hit and that it could be over next year. While many economists and strategists have been resisting the notion that we are in a recession and anticipate that the U.S. may enter one next year, we actually think we'll be coming out of it in 2023, said Wood ARK's chief executive officer and chief investment officer during the firm's monthly a few days ago. In late June, Cathie Wood warned that the U.S. is already in a recession. Our confessed CEO, Cathie Wood, admitted during an interview with CNBC that she had underestimated the severity of inflation and proceeded to claim that the U.S. economy is likely already in a recession, and would blame supply chain disruptions and geopolitical factors, like the war in Ukraine, for exacerbating inflationary pressures beyond what she had anticipated. She also said that a recession driven in part by mismanaged inventories had already begun. She said that the U.S. is now in a pretty significant inventory recession, but that it will not be anything like the systemic recession and financial crisis in 2008-9. She explained that it would be more of a garden variety. Wood explained that supply chain issues had led major retailers to mismanage their inventories, leading to a glut of certain finished goods like furniture that was in high demand during the pandemic. She said that even the best managed companies in the world are having problems. She added that the surge in inventory seen over the past year has been larger than anything she has seen during her 45-year career, from the mid-1940s to 2007. The average U.S. recession lasted 10 months, according to a 2008 study by the Federal Reserve Bank of San Francisco, with the shortest stretch lasting only 6 months. Wood said that innovation is recession-resistant, pointing to the recent shift back towards growth stocks as a sign of this trend, as their growth rates are superior to the rest of the market, which tends to be more influenced by the cycle as the central bank seeks to tame soaring inflation through tighter monetary policy. Investors will be looking closely at the data to help them assess their potential path of rate hikes by the Federal Reserve. While the CPI data for July could be flat, slightly up, or slightly down, Wood is expecting inflation to ease in the coming months. The ADO Digital Price Index, which is focused on e-commerce, recently fell, another sign of the inventory overhang out there that companies are trying to cure right now. According to Wood, innovation, particularly when it's technologically enabled, is deflationary, but it's good deflation, she said. According to Wood, the bad news is that the Fed has become extremely aggressive and hawkish, while the good news is that the U.S. is beginning to get data that confirms that the economy is in a recession. She believes that Europe and China have effectively been in recession as well, so it can now be considered a global recession. What are your thoughts about Tesla stock today? Let us know in the comment section below. Wood said, I think the fears here are going to shift from rising interest rates and higher inflation potentially to recession, and you've heard me on this before, because we see inventories piling up throughout the ecosystem, according to Wood. Innovation stocks in the public equity markets are down from 50% to 75% in the last year. Wood added that they are starting to get a lot of indicators that prices are coming down, and she thinks that the inflation that everyone has been worried about is the wrong way of looking at the world right now. She emphasized their belief that deflation is the bigger risk and fiscal policy is one deflationary force. Wood said the growth of federal outlays is dropping sharply. Economists have compared the current period to the 1970s, but in that period federal spending growth never fell. She said, we were wrong on one thing, and that was inflation being as sustained as it has been. Wood said supply chain can't believe it's taking more than 2 years, and Russia's invasion of Ukraine, of course, we couldn't have seen that inflation has been a bigger problem, but it has set us up for deflation. However, they believe that deflation is not a bad thing per se, but it is a bad thing the way that Cathie has approached it. She said that deflation can be a very good thing if it is caused by technology and progress, and that the US is bound to see a lot of that over the years, but as of now they are looking at bad deflation, and that the US economy will have to get through this to understand better. A recession in economics is a business cycle contraction, where there is a general decline in economic activity. It is a period of temporary economic decline during which trade and industrial activity are reduced greatly, as identified by a fallen GDP in 2 successive quarters. Recessions generally occur when there is a widespread drop in spending. Inflation is the rate of increase in prices over a given period. It is typically a broad measure, such as the overall increase in prices or the increase in the cost of living in a country. Deflation, on the other hand, is a decrease in the general price level of goods and services that occurs when the inflation rate falls below 0%. Inflation reduces the value of currency over time, but sudden deflation increases it. Although most economists argue that for now the US is yet to enter a true recession, ARK Invest's Cathie Wood isn't convinced. Wood, known for her big bets on innovative tech firms, said that the US economy is already in the midst of a recession, but just hasn't declared it officially. To understand Wood's theory, it's important to remember that the technical definition of a recession has been a period with 2 consecutive quarters of negative economic growth, measured by gross domestic product, GDP. By that definition, it is possible to find out that the US economy was already in a recession when GDP data was released in August, following the 1.4% decline in GDP seen in the first quarter. Wharton School of Business professor Jeremy Siegel agrees with Wood that the US is already in the middle of a recession. Siegel told CNBC the economy likely contracted in the first half of the year. I think we're actually in a mild recession. He added that indicators he is watching point to the economic slowdown into the third quarter, and in particular, data on the U.S. money supply has declined, suggesting we are getting a handle on inflation. How will a recession affect the leading EV manufacturer? Tesla has been performing well enough on the financial front over the last 2 years, driven by surging demand for electric vehicles. The production ramp of the mass market model YN3 and the opening of new production facilities mean that a recession does not seem to hurt Tesla meaningfully, while automotive players typically see sales plummet through economic downturns. Tesla's business is expected to hold up much better. EV adoption is still in the very early stages, and demand has generally been outstripping supply for Tesla. Tesla has previously guided for over 50% delivery growth over a multi-year period, while indicating that it could approach 60% growth this year, which signals that demand growth should hold up even in the event of a downturn. Additionally, economic indicators do not point to a very deep recession this time around with household savings rising post-pandemic, and banks are also remaining well capitalized. Visit Tesla stock and watch our other videos for more of this content.